Here's the podcast script. Prediction markets next major bet, Wall Street traders. You've probably heard of prediction markets, platforms like Kalshi where millions of people wager on political races, NBA Finals games, even Taylor Swift's marriage plans. But here's where things get interesting. Major financial institutions are now betting that these platforms can do something far more serious than settle bar arguments about who's going to win an election. Kalshi is the biggest prediction market in the United States right now. Last month alone, it processed $17.9 billion in trading volume. And it just raised $1 billion at a $22 billion valuation, double what it was worth back in December. The pitch to investors? That hedge funds, brokerages, and big trading firms are about to start using Kalshi not just to speculate, but to hedge real business risks. And it's already happening at a small scale. Take the Jeffrey, a bar in New York City. Ahead of Game 1 of the NBA Finals this month, the owner promised to comp many customers' tabs if the Knicks won. To protect himself, he bet $5,000 on a Knicks victory through Kalshi, and when the Knicks did win, that bet netted him just under $8,000, helping cover $9,500 worth of free drinks. The owner called it, the Kalshi hedge worked like a charm. Then there's GamePoint Capital, an insurance company that works with college athletics programs and sports teams. They help manage the financial risk of performance bonuses in athlete and coach contracts, things like what happens if a golfer wins the US Open and triggers $1 million payout. GamePoint Capital has started hedging those risks directly on Kalshi, and says it's often cheaper and more flexible than going through traditional insurance markets like Lloyd's of London. Now Kalshi is trying to take that to a much larger stage. The company has been hiring trading specialists and working with major firms to build out institutional infrastructure. Susquehanna International Group, one of the giants of the trading world, became Kalshi's first official market maker back in 2024 and has been a vocal advocate ever since. In April, Kalshi completed its first block trade, a deal negotiated between two institutions off the public platform, with Jump Trading Group on one side and a hedge fund on the other, brokered through Greenlight Commodities. The contract was tied to carbon allowances. People in the industry see a few categories where institutional hedging could really take off. One is political risk, using prediction markets to hedge exposure to election outcomes in a more precise way than traditional financial instruments allow. Another, potentially more exciting, is specific business risk. Think a company wanting to hedge against swings in DRAM memory chip prices or shipping costs. There are real hurdles, though. States have been suing Kalshi over its ability to offer sports betting within their borders. Gary Gensler, the former chair of the Commodity Futures Trading Commission, the agency that actually regulates prediction markets, has sided with Ohio's gaming regulator in a legal fight with the company, arguing that sports bets are very rarely about hedging. Kalshi and its trading partners say the CFTC has clear legal authority here, and they've got favorable court decisions backing them up. There's also the liquidity question: do prediction markets have enough volume to support serious institutional trading? Kalshi says institutional trading volume on its platform has grown 800% since November. And last month, the company launched a new product aimed squarely at that problem: perpetual futures contracts, or perps, which let traders track whether the price of something goes up or down with no expiration date, and crucially, on margin. Since launching on May 29, those contracts have already hit $5.5 billion in notional trading volume. Right now they're only tied to cryptocurrencies, but Kalshi says a much wider range of assets is coming. As Kalshi's founder and CEO Tariq Mansour put it, he thinks there's a new Wall Street being formed. Whether that's vision or hype, prediction markets are no longer just a place to bet on who wins the Super Bowl, and the biggest names in finance are starting to pay very close attention. Runtime estimate: approximately 3.5 to 4 minutes at a natural speaking pace.